It's Friday, traders, and we've got a cherry bomb inspired trade for you today. So there is no cherry today because it's not the actual cherry bomb. If you want to get the cherry bomb trades, they come from Tasty Trade. I have a link in the description down below. You can go sign up with them. But if you're interested, I've got a no risk to the upside, high probability trade that is IRA friendly as opposed to the strangle that they sent us in an email today. So if you're interested, stay tuned. If not, have a wonderful day. Let's get going. Everybody, my name is Neil. This is Option Theory. Thank you so much for joining us. You can see on screen we've pulled up Twitter, and it's been all over the place, right? So what we want to do is set ourselves up for a nice neutral trade, up, down, in the middle. Let's see if we can profit if it just kind of fluctuates and stays within a range. Does that sound good? I think that sounds good. So let's go to this Analyze tab. Let's go to the Add Simulated Trade. What we're going to look at is a Jade Lizard where we're short the 33 put, which is a 17 delta, which is almost a sweet spot right there. A little bit of the wide bid ask on this one, even though there is a decent amount of open interest. There's a little better open interest, in the 32, but I bet there's even more. No, in the 30? Yeah, even more in the 30. But we need to be able to collect at least $1 in credit so that we can have a credit spread to the top to protect ourselves on the call side if we want to be able to pull this off in an IRA. So here we've got the 33 is the short put, and then we're going to be short the 44 call and long the 45 for $1 wide call spread. We're able to collect here. Notice I have one contract here of each. All right. We are looking at a $1.13 credit, which is great because that's more than the width of that call strike. No risk to the upside. That's the Jade Lizard. Let's go to the risk profiling and see what that profile looks like here. It's a short put essentially, right, with a boost here. Okay, that if it stays in this range, right, then we can collect the extra profit of the $113. All right, versus what was the short put itself worth? 80 something, 90. Let's call it 90, right? Or 87 cents. So let's call it that. All right. And then that's better. And of course, if we blow through the call spread, we'll still make $13 on that one. So yeehaw, most of the expected move is covered in that gold price slice there. Notice the date in the top right is July 16th. It matches the date in blue that we see there. So that gives us an 83% probability profit at expiration for this trade. But the P50, according to Tastyworks, is a 78% probability that we could collect half the profit on this one. We'll see what that looks like. I'm curious to see. So what do you think about this trade? I'm going to right-click it, choose Confirm and Send, and let you know that the max profit is $113. The max loss is if Twitter goes to bankruptcy, it closes at 0 and somewhere within the next 35 days. It was a 35. I never remember. It's 35 days. All right. Oh, I should show you this, shouldn't I? There it is. There's the $3,200. Let's call it as our max loss on this one. In a margin account, it'll hold $404 of buying power. And of course, in an IRA, it'll hold the whole $3,200. All right, everybody. I'm going to hit confirm. I'm going to hit send. And that puts it into our working orders. And there we have it. All right. Thank you so much for watching to the end. It's the end of the week. I hope you have a wonderful weekend. Until I see you next time, may the market be with you.